Good morning, everybody. Welcome to another episode of Investing Bros. Got a very special episode for you guys today because it is Wednesday. And last Wednesday, we had our first guest ever, Caleb Franzen. And this week, we got another great one for you, Magic Internet Money. He's going to be joining us here in just a couple of minutes after the intro to the show. But make sure you don't go anywhere because he's going to be breaking down his charts with Bitcoin and several other altcoins to explain to you guys why this rally might not just be over. We might retrace a little bit first, but Bitcoin still has further to the upside to go. Even as we're talking this morning, it's heading back up towards the peak that it's been at last couple of days. We're sitting right now at 21,428. So it's already looking like today's going to be a bullish show. Go ahead, if you have not already, smash that like button. And if you are new here and you love crypto and you love investing and you love having fun and you love being a bro, even if you're not a guy, go ahead and subscribe to the channel because that's what we're all about right here at the Investing Bros. Whew. T-Shroom, how are you doing this morning?
I'm doing sublime.
We do have a debate, you and me,
that
we need people's help on. And I started it in chat. And people weren't helpful because the first grouping of it hated Macs. But I want to know who out there owns a Mac. And if you own a Mac, and we're talking about a Mac computer, and of course you'd have to have an iPhone, I guess, as well for this to work out well. If you have a Mac and an iPhone, do you have Messenger on your Mac computer? Because this morning T-Shroom informs me, because I don't have it on mine, but he has it on his. He's like, Tim, literally everyone in the world has Messenger on their Mac computer. And I already gave him two sources that do not. Smay does not, and neither does Taylor, my wife. But I want to know, is it just me, Taylor, and Smay out there that have Mac computers and Apple iPhones and do not have Messenger attached to our Mac computer? Let us know because I would love to win that debate. T-Shroom, though, give your case. Why do you think that every Mac computer has
convenience?
Messenger? But why do you? Not everyone takes every single line of convenience.
I understood it when you had a corporate computer and you didn't want to bring your messages on there because we had an IT program where the IT guys could theoretically say everything that was going on in the computer had to be that way for security purposes. But now nobody has access to your computer but you, Tim. So it doesn't make sense.
Sometimes you access my computer.
Inferior logic. I never access your computer, but that's okay.
You look at my screen all the time.
That's not accessing your computer.
Listen, I think that you're hacking my computer.
Okay.
That's why I'm trying to stay protected over here.
Oh, Tim.
It's gonna be a great show today. Did you have a quote of the day today?
I do not have a quote of the day. I was very obsessed with the new feature that you guys saw in the intro where
let's see it again.
I can't do it again.
I
tried to do it again and it can't. It won't work. It won't. Yeah. But we'll be experimenting with that more. And it's a lot of fun. It is a feature. I'm not gonna explain how I do it. We'll have to. I'm gonna explain how I do it in the Discord. So you got to get into the Discord, and I will show you exactly
later this week. Maybe tomorrow. Maybe
we shall see.
We'll see. Let's see here. What headlines we have? I forgot. We're not going to be doing a lot of news today because with having Magic Internet Money on, we're going to be covering a lot of charts and looking through some trade setups. So make sure you do not go anywhere, especially if you love money. But what are some headlines that people might? Let's see how I'm going to phrase that. People might not have heard of until the moment you say it.
Well, we could. I mean, I could just go ahead and do the news because it's so short today.
Let's do it. Really
I could just pound out the news right now. And basically, the big news I wanted to bring you guys is that the Bank of Japan kept their interest rates at negative 0.1.
I got you emotional.
Yeah, it's really tearing me up. No. But so basically check this out, guys. The Japanese yen weakened over 2% in the aftermath of January's Bank of Japan monetary policy announcement. Happened yesterday. If losses are sustained, this will end up being the best single-day performance for the USD to GPY pair since March 2020. March 2022. Sorry, March 2020. Yeah. I don't know what. Bank of Japan left all policy settings unchanged for January. And again, maintaining negative 0.1% on their federal fund rate over there. Last month, the central bank shocked markets by widening the yield curve band around 0% to plus minus 50 basis points. That was from plus or minus 25 basis points. The central bank also increased asset purchasing by buy JPY 9 trillion, so 9 trillion in their currency each month for 7.3 trillion prior. So they've increased their balance sheet. So if you guys know anything about and this is the USD to JPY pair after that announcement went live. So if you guys know anything about monetary policy, basically what's been going on is that the Central Bank of Japan has been going in the opposite direction of the rest of the central banks, but now it is starting to change that course. And this month, a lot of people were thinking that it was going to continue to tick in the direction of changing that course, meaning tightening, meaning hawkish, meaning overall bearish, money being more expensive. And they didn't. They just kept it the same. They did add to their balance sheet, which, theoretically, that actually stimulates the market. So overall, really, really shocking things to the market. Guys, the Japanese currency and their bonds could be in for a real shock show here in 2023. There could be a lot more shoes to fall over there in Japan. We saw what happened with the British gilts, and it could get even worse over there in Japan. The last thing I wanted to show you before we move on is that the core inflation year-over-year print for the euro area was as expected, as forecasted, at 5.2, up from the previous 5%. So their inflation is ticking higher over in the euro area. Yep. But as we saw yesterday, the German inflation was actually a meet. It wasn't a beat or a miss. It was just a meet, 8.6 down from 10. So Germany itself is doing well, recovering quicker than the overall EU. Tim, that's all I've got in terms of stories. There really isn't a whole lot else out there. Yeah. There's some minor developments in the FTX stuff.
That's what I was going to mention. Yeah. Was the FTX. I don't know if you guys have heard this yet or not, but it is found that 196 members of Congress, that is 1 in 3 congressmen, have been reported to have accepted money from FTX.
Absolutely insane.
Very interesting there. Odds are potentially, maybe, someone you voted for took money from FTX.
The odds are very good that somebody you voted for. And the odds are also good that you're not going to do anything about it, unfortunately. You're not going to write a letter to your congressman.
196 of them took money from FTX. How many losers took money from FTX? Like, they didn't even win their election. So
to be fair, I'm not going to write a letter either. So I don't want to be a complete red-nosed hypocrite there. But.
Look, we're going to run through really quickly. We're going to read through names that are in chat. We're probably not going to get everyone today, but we're about to bring on Magic Internet Money to do some TA. So we're going to be super fast here. The first one, though, was Mr. J. So special shout out to Mr. J. But following right after him was Mr. J. Bitcoin. And I don't know if we have time for epic voices because we're going to be just flying through here. We got Curtis.
I don't know where those epic voices are coming from.
Curtis Roy, Crypto Mini Bike, Yar Navarro, T-Shroom, Mr. Bitcoin again, Cryptex, Kelly Kellum is here. Love Kelly Kellum. Let's see, Jojo, Elo Brown, Crypto Ben Franklin, Crypto JMP, Jose Menyarva, the one that we never get correct, Josh, this is a fun one, Fektik, Josh Fektik.
Goodness gracious.
Had to pause on that one. That's a great one. DJ Rolling. Rick is here. Sovando Estrada. Magic Internet Money in chat, but also about to be on the camera. Who else is here? Matt R. Adam Delgado. Joker's Wild. See who else? Jabui 17. Jin Woo Jang is here. Another Josh Fektik. Love that one. Mark Joe 159. Steve B. Grand Roofing Incorporated, Salem Barshin. Sorry.
There you go.
Not a single chance that one's right. Mitch Shaw is here. Uptex Claymore is here. Justin Eubanks, Alex Green, Eric Brubaker. Let's see. A couple more. V Slim, Mike Play, The Philosopher, CBD Suddy, Tatted Grizzly, Josh Denham, Joe Watkins, and I probably missed somebody else, but Here to Learn. What a way to end on the names. Here to Learn is here.
I like that.
Just like all of us should be. Shout out to all of you guys. We love you, and we're about to jump into some of the charts here. Let's go ahead and bring on Magic Internet Money. How are you doing today, my friend? Ooh.
Oh, you're still muted.
But he's looking good.
And I always have that boomer moment.
There we go.
I'm doing good, guys. How are you this morning?
Doing good, man.
Really good. Good to see you.
Can you guys hear me all right, by the way?
Yeah, we hear you.
Yeah, it sounds great.
Let us know in chat how he sounds, because sometimes it's always different in the studio than how it goes out onto YouTube. But yeah, man, I am super excited to jump on, hear your opinions on some stuff, because people get to hear my TA all the time. But I always love listening to you. By the way, in case you have never heard of or seen Magic Internet Money, probably one of the greatest traders that I have had the privilege of meeting, and does a great job, and this is confusing, he does a great job of breaking down really complicated chart things and making them sound like the easiest thing in the world. That makes a lot of sense, and he's not a financial advisor, so he's not here to offer financial advice unless something changed, and you can update me on that one. But you can't go wrong listening to him and taking some advice from him. So yeah, let's go ahead and jump in here. Actually, you know what? Real quick, let's ask him. Do you have a Mac computer, or are you on Microsoft?
I'm a Microsoft guy. I am not a Mac guy.
I gotcha. Well, I did see a couple people support you, T-Shroom. A couple people supported me.
Yeah.
We'll call it a draw for now. I will suffice you. I'll go ahead and try to get my messenger connected to my Mac computer so that you stop yelling at me about it every morning. So let's go ahead and jump on to the charts here. What are you seeing right now with Bitcoin? A lot of people are in the boat of saying that they think that we're just way too overextended. It is time to crash back down. Are you in that boat, or do you think that we actually have more room to the upside, and do you see us just jumping straight up? Because this morning we're sitting right back right now at 21.5, or do you see a little bit of a retracement and then maybe a price action up to 23 or 25? What are you looking at right now when you're seeing the Bitcoin chart?
Yeah, I'll share my screen. I've got a blank chart up because we're gonna keep it nice and simple, of course.
Awesome.
And we'll get.
I love your background, man. It's so colorful and vibrant.
Yeah, no, this is an old spare room. I turned it into an office. There's actually a weight set behind everything over here, so you can just work out in the office. It's good to go.
It's good.
But
don't you also trade? Don't you trade while you walk on a treadmill?
Yeah, I'm on a treadmill right now, actually.
Yeah, this guy is.
It's not going, obviously, but I walk in the mornings for like an hour to start my day. So it, just a good way to keep it going. Then take the dog out for a walk. So kind of, I think that if you take care of your body and mind, everything else kind of falls in place.
That's right.
Not to get too philosophical on you guys, but it just kind of helps.
Come on.
Kind of like making your bed in the morning, that's what I do. So Bitcoin, yeah. So you're obviously up here at resistance. You have these old highs right here. So if you just went to like a really high time frame chart, and I'm talking like the 3-month chart, not the highest you can go, but pretty high, you start looking at these candles. And if you are getting a reversal here, you can already tell straight away where you need to be flipping. I believe this was October. Right? So you're looking for the October high right here, which was also your last quarterly high to get flipped. And if so, you can start looking up to these local highs here. And that is supported by volume, So in terms of like, are we looking for a pullback? It would be nice, but I don't think it has to happen. And main reason being is when we look at this, and I'll pull over this chart here. I think you go this way. Still getting used to the setup. I rearranged here recently. So hopefully you guys can see this okay. I'll try to make it a little bit bigger, and we'll get rid of the cumulative delta here. It's just not necessary. You are in an overall range. And what I've done is I've merged this back on a platform called ATAS. So this is a merged TPO and volume range from when we broke down from we call it 28K, 25K, whatever you want, that little zone, that last washout. So now that you've deviated this range, and we'll talk about deviations and why those are the best trades, you're above the point of control, you're above the time point of control beneath you. It stands to make sense that after you've deviated a range like this, more than likely you're going to rotate it in full, which puts you back up at these values at 23,052 and 23,330. We come over here and we look at the values that we're working off of. We're looking at 23,301 as that, kind of like first level we've identified here. So what you'd want to do is probably extend this box down to that last local high right here from September, which is like 22,810. And I think that gives you a really wide zone. And you could probably shore this up a little bit for like a speed bump at 23,330. But for me, I'm actually looking up to 26,724. That was a level I started giving out in December on like the 14th on Sin City Crypto. And, everyone's kind of looking at me, but what it is it's a mean reversion play. And we had one last year that was really great all the way up to 47, but you're just looking for your yearly average from the prior year or your yearly pivot. That's all this stands for. And these hit, I think there's only one time in Bitcoin's history we didn't hit it going into the next session, which is the next year, right? So, and I believe it was right here. So that was why it was such a big level for me coming down to this. This became a statistical target because I know that we backfill these on other time frames at a high rate. So I'm expecting us to push, to be honest with you. So I'm still short from up here, but I did hedge long right here at 16.6. There was a really easy trade to get into. And I think that this is a good area to start gauging price. And it lines up really nicely. Again, if we go back to the high time frame chart, we'll get rid of this here. So just keep 26.7 in your mind. And we know that locally, this is kind of the resistance that if we get above this, we're going to go to this box. However, when you start really zooming out, you don't really have resistance on a macro time frame until you're up here and like this, this is the 2021 low and the 2021 open, right? So I'll mark those off with lines here so that you can see the values 27,744 and 28,955. And that starts to line up really, really nicely with some of these old ranges right here. And so you can see that was your support as you were coming down. Support, breakthrough, right? So one would think if we're going to do something and rotate this range in full, fulfill that yearly pivot, you can now remove this box from your macro thoughts and say, okay, this is where I think the biggest resistance is. And I know that I have that one level just beneath it right here. And so you could really look at this from 26.7 up to here as if this is a true rally, which I think there's no reason for us to not think it is. This is the likely landing zone before. And I say that because if you recall from last year, in the same time frame, we got a similar rally, right here. This was the rally I was speaking about. Back to what? The yearly pivot. It's what we were looking for. Very nicely done. And you had this nice reversal here, and it lasted about 2 months. And you could really time this whole range based on the first data that came in. And we can do that with this one too. So what I mean by that is I like to separate things in chunks of time, obviously, just like the candles, right? Daily, weekly, monthly, 3 month, 6 month, yearly. In the first 6 months of 2021, you formed the overall low for this range and almost the overall high. So in theory, you should be able to time the rest of the range based on that type of expansion. If volatility remains the same and we remain range bound, you can now just take this over to here and you can see there's your low, there's your next high, here's your local low, right? Coming into the next high. And this one actually broke down into that yearly pivot. So we knew that this was changing. And that's why I started looking for shorts on a macro level, knowing that this range was more likely to probably start expanding to the downside because time had started to kind of be on the side with the macro events that were taking place. This was a really nice liquidity grab, took all these local highs here, back test the point of control and TPO point of control of this range. So another really nice confluence and off you go, right? If we do the same thing over here now, we look at it and we say, okay, well, what data is important? Well, we made a low in 2022 and we made our high in that same 6 months of price action, right? So for me, what I like to do is I like to say, okay, how long did that take? So if we're looking for this as like a really nice bottom in the sense that it's going to rally extensively, we would now begin looking at this as a timeline of really not making a top till almost February. So there's no reason for me to really be putting on any additional shorts in this region, just because from a logical standpoint, it's like, yes, there's going to be pullbacks, but until you're really broken down below 19,150, in my opinion, I think that the direction is up. I would have loved to see the just underneath 20K zone. Obviously, Bitcoin's not giving us that just yet. I think PPI, as you were mentioning, came out favorable today. So some things are in the works there. But if you flip this 21,530 level, or this right here, I guess is the 21,530, I think that you've got the chance to run 22,810 up to 23,3, and then we can reevaluate, and see if that's where we're going to get a pullback. Because that's, technically, if we just used even the volume profile, right? And we just said, okay, this is our overall range. Where's that coming at? Just above the 22,810 highs, that $23,000 zone. That's what I'd be looking for. So it was, to me, it's been a really easy trade on Bitcoin. This one was one of the easier ones I think you could have gotten in if you were paying attention. However, it did fool a lot of people. And one reason I say this is one of the easiest ones you could have gotten is there's similarities between this and 2019. And I remember trading this specifically. I put it on my Twitter for that reason. I traded this in 2019. I remember exiting my long at $8,800 and just kicking myself in the butt the whole time because it ran all the way to like 10,400. However, you had this massive structure here. So this is a descending triangle, obviously, really big one, just like we just had at 17.5 to 25. It broke down and everyone was calling for 6K. Even I was like, 6K is coming, and it eventually came. However, everyone got caught off sides. There was massive bullish divergences that were building up. At the time, I was still trading with the RSI quite a bit. I think you had RSI divergence here. Yeah, you can see you got these lower lows, higher lows down here. Really big divergence. It just made sense to be long. So took long positions, and it backfilled this NPOC from Q3, which is what you're looking at here. But then it rolled over and dumped. I don't think we have to do that this time. It's just a scenario to be aware of. But the important thing is that you had the Q4 open and the Q3 low right here. So again, back to the quarterly charts. I'm not going to flip to the high time frame to show you guys those, because you guys can go to a 3-month chart and identify the low and the open if you needed to, right? 2019, right? Similar story. You have this big descending triangle, breaks down. Everybody wants 10 to 12K. It's not coming. You start building divergences. Then you have a sign of strength right here. And as you re-enter the range above the Q2 and Q3 low, which is also happens to be your rejection point here on this double bottom, you get a rotation back to where there was a daily naked point of control at 21,296. Also, this is your local high here. And this is a really big inefficiency. You can see, fast move down, fast move up, right? So one would think that if you start losing 20K, it's probably a quick move back to support. So I really don't want to see that in the short term because of how extended we are. If we're going to go up, I think it needs to get going. But yeah, I've taken some profits on that trade. I think I took them at 21,269, and everything else I'm just going to leave to run. I'm not closing it unless I'm forced to. And if we start flipping some of these areas, I will consider closing my hedges from up higher, and I can look for re-entry later. Mainly because I just want to lock in some of those gains. I've been holding the trade for almost a year now. There's no sense in being too greedy, right? So that's what I've got on Bitcoin. Hopefully that, translates well to you guys. If you guys have questions, just spam the chat.
Yeah, we're definitely, as this is going on, make sure you guys are typing into the chat what you want to ask, because I have some questions of my own. I'm sure T-Shroom does as well. Let's go back and look at that chart, and you gave a couple numbers there, but what are you looking at as the top? I know on the show I've pointed out there's some numbers right there below 25,000, around 23.8, that look kind of interesting, but there's also numbers above 25,000, anywhere between 26 to what I was looking at is 27. I think it was higher hundreds, but you mentioned something about 28,000. What is the point that you're looking at that you're saying this, to me, if we can get here, is best case scenario for right now, and I would go ahead and take all of my profits and then wait for a lower dip?
Sure, absolutely. So one thing that you'll notice on this bull market, that timing wise it was the same, right? But structure wise it was different than we have ever had. This is the largest top we've ever really formed, so to speak, top. But what you did was you ranged a lot. On the way down, you can see it was just sideways and up, sideways and up, sideways and up, right? And everyone got excited on every single push. One thing we never did was break back into an old range and then flip it to support. So on a deviation like this, now what I'd be looking to do is saying, okay, can we start flipping the top of this range? And if we flip this to support, we've done something different. We've had a change of behavior, so to speak. That to me, from a price action standpoint, would start to look good for a larger rally, in which case now I want to see this come back and be support. So if we do come up, and I think that this will be resistance if reached, come up to here, you want to see this flipped into support, right? That's really all you want to see. And if you see that, you can start getting into other ranges and off you go, right? So that's how I would look at it. That could take time, and that would really imply a much larger rally, probably longer than a few months, in my opinion. However, I'm looking at this from the perspective, and this is something I brought up a long time ago, actually, was maximum pain. I didn't have these new lows coming in, was coming up to these levels and then back down to these lows. So if we got a larger consolidation range, that's what it's going to look like. And I think that's healthy, and that would be very 2015-esque. But that things don't always have to be the same. So they're only ideas. But yeah, I'm looking for a flip of, anywhere from, I think, 24,270 up to 25,2 would be looking good to me. And obviously 23, you were mentioning that, like 23.3 for me, that's just your value area high of the current range. And so to me, if you flip that, then it's good to go. But right now you're pretty extended, so this isn't a place I'm looking to add any longs. If I was going to add a long, because I think that the direction is up. We've talked about some pullback numbers, on our channel, and I think I've seen you as well kind of in favor of a pullback because you think it needs to cool off. And I don't disagree. I think that's healthy. I think that you get a little out of pocket, so to speak, for lack of a better term, if you start breaking below like 19.6.
Yes.
And I'll pull up my Bitcoin chart for that locally. And the main reason being is that's, your CME gap is there. And you've also got like a local golden pocket here. This is, I call it a caveman level. So this is a hand generated pivot that I started doing in like 2021. And everyone would always ask me how I do it. It's literally the pivot formula. I just take it to a specific time frame. So I would always tell people it's so easy a caveman can do it. And that's hence the name. But it's 19,632. And those have, an 84% hit rate in their history. So generally within 2 weeks, we meet this number. Then now 16 out of 100 times it won't. So it's not like it's a guarantee. But losing this level would also be the weekly pivots are just above it. Your macro point of control in terms of this overall range is here. It just doesn't look good to be giving that up without a full range rotation after doing something like taking these highs on just such a massive move up. And we've talked about this, quick move up equals quick move down. So I think if you give up that CME gap, you probably come all the way back down into this range, this, quarter 2 and quarter 3 low. That's all this is, 18,090 to 17,567. It's just below the bow here at 18,700. So you don't want to overlook that by any means. But I think that you have a much larger pullback. And then I look at these lows and just say, man, we have not taken any of these lows. I would almost be in favor of coming all the way back to the yearly open at that point. And the yearly open is much, much lower. And that would be the most relevant level on the chart until then. I don't know that I think I have the 2023 open in here somewhere. There it is. Yeah, right there. So that's how I would look at it. I'd like to see this, if it does cool off, I want to see it holding this like 19.6 to 20K area. Sweep these lows potentially right here, get a little bit larger structure, and then a break upwards into this 23,000. If you start losing this level, I'm not saying that the rally is over. I'm just saying it's a little, I wouldn't say sus, but I'd just say it doesn't make sense to me to leave these lows at that point. From just an overall order flow standpoint, it feels like you would come back, fill in all of these candles, and probably take some lows here into the yearly open. However, that's only my opinion, right? So opinions don't pay the bills, trading does.
I like it.
But
that's our quote of the day right there.
Yeah. So, there we go. So, that kind of leads into a very, very heavily asked question that every person has their own opinion to. And I know you, based off what you just said, this is a ironic question, but in your opinion, is the bottom in? Do you think there's a new one? What do you want to see on the charts to, let's say you think there is going to be a new bottom, because you're even kind of implying right there, we could at least go back down to match previous bottoms. Yeah. What do you want to see to say, actually, nope, screw it, the bottom is in, we're never going below. I like that 19.6 level. That's also a level I had identified based off of the fixed range volume profile.
There you go.
What do you need to see to say 19.6 will never go below that ever again?
I would never say never go below again, because anything could happen, but only because I remember that from 2020 when we went back to 3K.
Right.
But
thanks, Elon.
I really want to see that 25K range get flipped would be really big.
Yeah.
Because then you are doing, like I said, it's a change of behavior, flipping something that we have not done that the entire trend down. The trend has been down. So need to see that flip of the trend. I think you can start getting preliminary, like bullish, like more bullish, I guess, once we start flipping these local highs right here, obviously. Mm-hmm. But I think that if you're looking at this from a macro point of view, if you get back above this area, you're probably going to chop around that yearly pivot at like $26,700, $27,000, right? Mm-hmm. However, historically, once you get back above that after an all-time high, you generally go to the gold pocket of the overall move, which is way up here. So you would start looking at this saying, man, we could see like $35,000, $38,000, maybe even higher. Like that'd be pretty wild. That's all kind of one of those things where we have to see those things, though, take place before we can jump to that conclusion. But I plan to be exposed to the asset if that happens. That's why I took a position. I'm not like a notorious bear or anything. I don't go on Twitter and just, for lack of a better term, shit post, bearish things all the time. Yeah. Sometimes I do if it's like an XRP community. I'll go ruffle feathers just to do it. But you gotta. It's called engagement farming.
Wait.
Engagement farming.
What about the XRP community do you find particularly worthy of messing with?
Because they get triggered the easiest.
Gotcha.
they really do. They get triggered so easy by opposing opinions, which, they're passionate about their project. And I think that's great. I'll tell you guys, I trade XRP and I buy and sell it like anything else. I'm not, I don't like shun it and say I won't trade it because I don't believe that it's going to like all-time highs or anything. It's just one of those things.
Have you pooped on the Solana community anytime recently?
I did.
They're also very
I pooped on the Solana community a long time ago. So like when I first teamed up with CVO a year ago in December of 2021, I told him that Solana was going sub $40 and it was still 200 and some change. And he was like, there's no way. And I was like, yeah, man, it's going sub 40. There's no way it's not. Look at this chart. Same with like FTM, things like that. He was just like, okay. And then when it happened, he's like, how did you know? I was like, you don't know. That's just what the chart said at the time. Was more than likely once we started breaking down, these were going to be the targets because there was such a discrepancy in market structure between like $40 and like 200 and some change. So it was just like,
Yeah.
I'm not interested in this asset till down here. Now, I did say that I did put my foot in my mouth and say that I thought Solana eventually will hit 278. So, maybe that happens, maybe it doesn't, but it is ripping pretty well right now.
Yeah.
Well, it was. I haven't looked at the chart today or yesterday, but it was doing doing things that bear market rally. That's all it was at the time.
Yeah, when you get crippled the way it was, it's up over 200% since it's low, and it's not. When you think about it, it's not that hard to do that when you take the beating that it has gotten this year, not only from the retail but the development team leaving, and so anyone who believed in it, for any of the Solana community out there, and you bought down that bottom, you're sitting very pretty.
Yeah.
Before we move on, I have a question here. A couple of people asked this question. So I'm just going to go ahead. I know V Slim is the one I see, but I thought I saw someone else ask it earlier. You mentioned earlier that you sometimes do those really long trades. They were asking, what kind of fees are you paying on year-long trades?
Actually, I'm getting paid in most cases. So the funding rate on Bybit is usually like 0.01. So since I'm in a short, I get paid every 8 hours. So like I actually make money to hold that trade most of the time unless the funding rate gets kind of out of whack. So, just making a couple $100 here and there and call it a day.
Nice. Very nice. All right. Well, let's transition here because we talked a lot about the Bitcoin chart, but there's some other things that affect it. I know one of the charts that you wanted to bring up was the Dixie, and a lot of people have been looking at the Dixie because it, of course, during this rally is falling itself. Currently, right now, almost about to drop below 101. It is sitting at the lowest it has been in a very long time. Can you go ahead and bring that chart up? What are you seeing happen on the Dixie chart, and what does that mean for not only Bitcoin holders, but other crypto holders and even stock market, people who own stocks? What are you looking at right there?
Yeah, definitely. So even on the high time frame, so this is something that's hindsight 2020. I called it out in the time, but I said I didn't believe it was technically the high yet, even though everything that I was working off of said it was the high. That kind of bit me in the butt because you had completed this harmonic into the target, almost an exact fill. So all this was a larger range right here between these two 12-month levels. So they're just 12-month opens, right? And you had a really nice range that was going on here. Once it expanded, the measured move of that expansion and logarithmic percentage was right here. And you can see we almost hit it to the T, came up a little bit short. But you have a really nice harmonic reversal pattern here. And I was like, yeah, the hopium, this is over the summer, obviously, is that this is the top for the Dixie. And I think that might be playing out. And so keep the 12-month level here in mind at 101.76.1. And what I was looking for last week was coming into this box that I had put on the chart, just some support that I'd identified, and it panned out really well if you were just trading it. However, it is reversing here. I think so, probably on some news that came out today, knowing that that's going on. You had this key local low as well right here, which was our range. So how you would have seen that this was going to go lower, and this is something I talked about on debate, was you had this range, it expanded, and then what we talked about was how unless you start really living above 104.775 and holding it as support, you're not looking for upside if this deviates the range and comes back into it. That's actually a sign of weakness, and I would expect this box to be hit right here. Now all I'm doing is just watching this local low. Like I should probably set an alert there, but you just want to see if this local low gets taken, right? And if it does, do we swing fail it? What happens there? Because if you find acceptance down below these levels and you start continuing this bearish trend, realistically for me, I would be looking all the way down to $96 on this, or 96, I guess, which is a big dump. And that's in line with the overall high time frame here. I don't know how well these apply to something like the DXY per se, because I'm not a huge indicators guy. Like I always tell people, like, I don't know if you can apply indicators to the DXY. I just kind of trade it off market structure. But finding your way back into this old range is not a good sign. This looks like a deviation, and generally you're going to hit the EQ and then maybe even rotate it in full over time. And that would be supported by the B leg, which is normally your first target on something like this, because when you expanded to the upside, where was your range that took place? It took place down here from the A to the B to the C. So you can say this whole range right here. So you can see the shoulder, head, and then kind of like an ugly shoulder. I wouldn't call it one, but kind of like a nice double bottom, maybe right here, whatever you want to call it pattern wise, and then expansion, right? So you'd be coming back to the range high of your expansion, which is the B leg. And you have this larger range that if you find acceptance into, you can kind of start saying, well, man, that might actually happen. And that's how it all lines up. So the DXY, if it doesn't get going here, could be in some trouble. The dollar could be anyway, which is good for risk on assets, obviously. Mm-hmm. And it kind of supports the claim even more that maybe we do have a bottom in place and that we do need to be shifting into different ideology in terms of like, what's the trade this year? Am I shorting these rallies or am I buying the dips? That's what you want to be kind of looking at. So that's all I'll really say there.
This is really good. I mean, there's a comment just made by a mellow fellow, and I have to agree with him. I think a lot of people in chat are agreeing with him as well. He said, dang, this got me feeling super bullish right now. So I want to make sure that we temper emotion and stuff, because there's a lot of stuff happening on this chart. Bullish for Bitcoin, bearish for Dixie, which is bullish for everything else. Let's take this all into perspective, because I know that you study the charts a lot, but I know one of the things you're heavily looking at is what happens with the Fed, what ends up happening with whether we're currently in a recession or whether we're going to hit a recession. Let's take a break from TA for just a second and put some perspective on the news. What are your thoughts about the whole market right now in general on this day-to-day, like we're kind of watching every single day as something going to new break, that inflation's getting worse or the recession is going to be worse than we thought? Like, what are your thoughts about what that looks like for the rest of 2023?
So I have been on record of saying that if we are going to get like that full-blown meltdown recession, it does come in probably the second to third quarter of 2023. I think after that is when it comes. This rally, that's why I say you got to flip like 25K. So that's a long ways away. And that can definitely run up there and hit those figures and not flip it and then come all the way back down, right? So trying to stay objective, and I'm not trying to get anyone super bullish, but these are the facts in the charts right now. That's what's going on.
Yeah.
So as I said, we're not selling the rips maybe as much anymore. We're buying the dips. So patience is still there. Keep that in your mind. Don't just FOMO into resistance. But I think the Fed, it's going to be interesting because I'm curious what they think about the markets pumping the way they are, because they kind of alluded to they don't like that as much, that people are doubting that their resolve. However, that doesn't mean they won't pause rate hikes. And I think that we're going to get at least 25 basis points at the next one, maybe 50, to get them close to that terminal rate. But the news that came out today where they were showing consumer spending is down is good. That's what they want. I think core came in right where it's supposed to, but then they were showing that people are not spending as much money, which is what they want.
Out of curiosity, down from what? Like, is that down from December? Is that down from November? Because obviously, people spend
it's down month over month, basically. Yeah, okay. It's just like month over month.
Yeah, Q4. That's a good point, Tim. I was just going to say, so Tim made the point that in Q4 there's a lot of discretionary spending. Yeah. Probably the peak spending month.
Well, I mean, it's to be expected. It's the holidays. That's usually when everybody spends all their money anyway. I mean, at least I have kids, so that's when I spend most of my money in the year. Yep. But yeah, so that's what you'd be expected. But as of right now, the rally, it's great, and I'd be curious to see what the Fed does say about that, because they've expressed that they don't really like that the markets are rallying on this type of data, because they think it's not disrespectful, but they think that their people are still spending money despite basically being told by I wouldn't call them the market maker, but pretty close to it, that they need to stop doing that. And so asset prices going up in the stock market and stuff, they want to see these things come back to more reasonable valuations. I think the tech sector is the best example. They got absolutely murdered in this last, bubble, so to speak, or pop, if you will. But if they paused at 25, like they did at 25 or even a 50, and then they paused, that I think would get markets pretty bullish. Now, the problem with that is the markets generally, we're all looking at historical data. The markets generally don't bottom until after you stop raising rates, because they've spent so much effort in bringing jobs down and the economy down, or labor market for a better term, that now when you do get bad news, it is really going to be bad, because the labor market's not there to prop everything up. Because the labor market has been, according to their data, stronger than they anticipated up until, here recently, where it's starting to kind of come back to earth. So I would be curious to see what's going on there. I'm trying to dive a little more into the bond market, because I feel like they're telling a different story right now, and I don't know enough to be effectively fluent in it, so I don't want to speak on it. But I'm curious if T. Shroom has any, ideas on the bond market and what he thinks is going on right now.
Yeah, well, while you've thrown it to me, I'll get to the bond market here in just a second. But the retail sales month over month printed this morning at 8:30, and it came in under forecast by a decent margin. Yep. It was forecast was negative 0.8, and the actual was 1.1. I'm sorry, negative 1.1, and the previous was negative 0.6. So this is a bearish reading, a bearish print, and then also the same for the PMI, the PPI. So it does start to show a softening in consumer discretionary, in retail sales, in consumerism, which is what has been driving the American economy and allowing corporations to continue to take out loans essentially and continue to try to grow rather than to contract. Yes, there's a bunch of layoffs, but that doesn't mean that they have to stop operations and stop trying to expand operations. But when your people stop buying, when your customers stop buying things, your clients stop getting your services, that's when you start to slow your rate of credit purchasing, and that is when it does start to get into more of a recessionary type of economy. Mm-hmm. So labor is kind of the last pillar there, one of the last pillars at least. If labor starts to show softening, then you do start to slip into a recessionary type environment, and then GDP slips back negative. But December did help us quite a bit. We had really low oil prices and we had high consumer demand. Let's go take a look over at bonds, because you make a good point. We haven't taken a look at the market open like we usually do. I'll just go right to bonds. I mean, today the bond yields are down, by quite a large margin. I've got Lux Algo up here. Let me shut that off really quick. The 2-year down 2.5, and
are you able to share your screen, T-shirt?
Oh, good call. I'm sorry. Yeah. So and then the 20-year down 4%. So yeah. So it's pretty intense there. That the margins today, the yields today are down quite a bit. I think that probably has to do with the Japanese news that we reviewed at the top of the hour. But overall, bond yields going down means that there is more purchasing of bonds. There is less of a market incentive being built in for you to buy bonds because they are actually in demand. So if that makes sense. So folks have been the bond market is usually considered to be smarter money. So the bonds, folks are rotating into bonds in anticipation for a recession. They're also rotating into gold, right? It's for the same exact reasons. Bonds and gold tend to outperform during a recessionary period. And, usually the folks trading in the bond market are a little bit smarter, a little more conservative, you could say. But with everything that's going on in Great Britain and in Japan, with kind of the limits that they're getting to, you do kind of have to scratch your head and wonder, is it possible that there's just a lot of international flooding into U.S. bonds because Great Britain and Japan, which are some of the next biggest markets other than the EU, they're showing signs of extreme weakness and cracks are beginning to show. And then you start getting into the more the doomsday conversation of like, well, is this the end of the financial world that we know of? What are the implications on crypto? I don't think that we're quite there yet. Yeah. I think that the bond market is a very old market. It's been through worse. It's been through the Great Depression. I don't know that it's been through worse so rapidly. And in many different nations at the same time. But anyway, that's my assessment of the bond market. I think ultimately what it is indicating is a recession, but it hasn't fully locked that in.
Yeah, that makes sense.
Yeah.
Speaking
the speed of it, you're correct. Go ahead.
Speaking of people to know, so maybe what we can do is in here in the next little bit, even get a video going deeper into that with Caleb Franson. He's in chat right now. He's somebody who I know he taught us a lot.
Oh, good.
About how to read and look at the bonds and the yields and the Dixie and that stuff. So maybe what we can do is, if Caleb, we'll message afterwards. Maybe we'll get together and do a little afternoon interview to break all that down.
I'm really glad that Caleb's in the chat because he can set me straight. Yeah. The bond market is complicated right now, guys, because everything that I just explained is true, but the thing is that there's been an inversion in the yield curve, which distorts the bond market. So I would love to have Caleb correct me if anything that I said was like super off, but overall I'm pretty confident in the fact that a decrease in bond yields indicates that folks are anticipating a recession.
You got the Caleb Franzen
okay,
thumbs up.
perfect.
He said what you just said was spot on.
Yeah,
there you go.
Yeah,
So.
Exactly. I'm looking at the bond market the same way Jerome Powell is. We're on the same wavelength, me and Jerome.
Well, let's transition here. Let's go back and look at some more charts here. Let's transition a little bit. We might touch on crypto a little bit later because I know there's some altcoins you were talking about that you were interested in.
Yeah.
But let's look at the SPY because that's another thing. So we looked at Bitcoin, we looked at Dixie. We're talking about what the economy could look like. I know you said you were seeing some things on the SPY or the SPX, the SP 500. How does that play in, especially when we're talking about these bullish charts we saw earlier? Are we seeing the same bullish nature go into the stock market, or what are you seeing over there?
Yeah, it's giving you a really nice invalidation. It lines up with the Dixie even. So like, let's say that the Dixie comes here, rallies, holds this low and rallies. You'll see something out of the SPX that's going to kind of tell you that rally might be sustained. So I have one alert set right here, and this is a little box here. Basically, this was your range as we were falling into this zone. This was support. It was like 0.5 fib. It was also the target from a shark that I was playing. And what you'd be looking for is a lot of volume, and you'll like this. So this is your 2-year range on the SPX. So you can see that this is your overall point of control for that 2 years of price action.
Oh, wow.
Now, if we said, well, I only want to see the last year, I'm not interested in 2 years of data. Again, same exact level.
Wow.
You could go to the last 6 months, same exact level. Well, right here.
It's almost like
you could go to the quarterly. Yeah, you need to hold this level. And this is a yearly regression. So this is a tool that I've customized with some settings, and then I just apply at the time frames, guys, because it's important to use these things non-subjectively. I only apply them to like the daily, weekly, monthly, etc. That way I've always got like a constant, and this is your 1-year regression. It's been really good for 2022, and you're trying to get back above it, which you've done several times. But if you start breaking back into it, kind of like a deviation, and you lose that point of control, this is the average of price from the prior 6 months. You can see that was your support off the initial rejection of the point of control here, back to support. Now you're back above it. So you don't want to be giving that level back up right around like 39.50, give or take. You start losing that and rolling back over, you're going to see 38.85 most probably. I think that fills this little gap in. But then you got to say, if we lose that level, I mean, man, you could be looking to take these lows, maybe even come back to the lows here of this regression. And the next time plot I have for a pivot, because I time out the market, obviously, using fib time. This is the first pivot right here. There's your high. There is your low. This one wasn't as nice, but still got a nice little like high right here. And then you can see that this was the next high that I was looking to be put in, was in this region. I'm looking for the next pivot on the SPX coming in the middle of February. And if you recall, when we were looking at Bitcoin, we were saying, okay, sometime at the end of February is our next time pivot if we were looking at this from a rally standpoint, similar to last year's rally in the early Q1. So that wouldn't look good. It would make me think that we were coming down. And then I would actually be looking for like a 3 drives pattern into the 2020 naked point of control, which is like right here, and that would line up really nicely. However, you can't trade for it until those things happen. So in terms of what you want to see bullish wise, are we going to see this box up here? It's really easy to tell because, again, we're going to go out to the quarterly chart. And I'm a big proponent of, the quarterly chart on most assets, to be honest with you. And let me get rid of these boxes so it's a little bit cleaner, and we'll get rid of the timing as well. It's just not necessary for this. That way it's somewhat clean for you guys to view.
We appreciate it.
So when you go out to the quarterly chart, you already notice it right here. The Q1 low and the Q3 NPOC are right here. Both are still intact, so to speak. But if you go to the Q3 low, this has been the level, or the Q1 low, from 2022. If you go to Bitcoin and several other assets, this has been such a key mark. Like XRP is a great example. I'll show that one to you in a little bit.
Yeah.
The Q1 low has just been the rejection zone. You can see that you've come up here once, but now it's resistance. You need to get back above that level. And you can go out to the monthly and you can see it again right here. You've got the Q1 low just holding up as the area to get back above. And if you do, you've got the prior year's pivot right here that I think you'll go see into that macro gold pocket from the high to the low right now. I think that's the target for me. But if you were to even look at this from just a go to the weekly chart and just say, okay, just from a structure standpoint, what is it about right here? I think that would be a good spot. And then pull it before you break down, something like this. There we go. There's your value area low. If you were to merge all this price action, because you got some acceptance right here, before losing this level permanently. This will be your value area low as well. So you've got some different confluences there with both volume, you've got horizontal levels, you've got a naked point of control here. Everything says that you need to get back above 41.1465. And if you can do that, I think you've got I wouldn't say substantial, but in this market, all I would be doing is identifying this local high at this area of known resistance and saying, do we sweep this high and then dump? Or is this a real rally and reclaim it and turn this into support and then, range inside of this value for a little bit? So that's really the two options on the SPX. Like right now, obviously, I'm long risk assets. I've taken some profits, but I'm going to continue to be long until something tells me not to be. But that would tell me that maybe this rally is coming to an end if we start losing this area of support at like 39.50 and rolling back into this regression. Then you've got a scenario like this on your hands, because a lot can happen in the next month, I guess, in terms of that timing. There it is. You would have something like this. Basically, you've come up to the gold pocket right here. You've retraced back to the gold pocket, and you'd be looking for an equivalent retrace for a 3 drives pattern into the 2020 NPOC. So if you were to come over here and look at your annual ranges, you can see we have an inefficiency down here from 2020 that has not been filled. So you'd be looking at it like that. That's only if the bear scenario plays out. For me right now, I think that that's the less likely of the scenarios, but anything is possible. Anything is possible. It's always good to be prepared. So you have a plan.
Yeah. Super cool.
Those are some good levels on the SPY for sure. It's kind of making me think, because kind of like the lingering question is like, there's two narratives. The market has kind of decided, the bond market, smart money, even metal markets are kind of indicating, hey, there's a recession coming. Well, why isn't the market selling off more like Tesla selling off? Why doesn't the S&P look like Tesla? And I think the reason is because there's 6.5% inflation. Well, that's the rate of growth, 6.5% inflation. Wealth does not want to be on the sidelines.
In cash.
Wealth wants to be in it wants to be in growth equities. It wants to be in and that's why the Dow's doing so well, because it's kind of the best of all worlds, where you can still be in the market, but you still have a thesis for conservatism, because it's certainly not the NASDAQ, but it's also not the S&P. And I mean, I don't know how often you take a look at the Dow Jones, but it's up above that. It's well up above that. It's flipped that line of resistance into support for since I want to say November. It's been outside of that. So that's kind of
it's kind of decoupled a little bit. Yeah.
It's kind of a thesis that's kind of come out of this conversation. And also when you challenge me to kind of analyze the bond market, it's like, why is the market failing to correct when recessions and has been in the headlines? And I think part of it is like, there's just too many statistics coming out of the Labor Bureau of Statistics that people just don't trust. And ultimately they just trust their own instincts and their own charts. And, they see the help wanted signs in businesses, and they still feel like the economy is strong enough to keep investing in. And also they just don't want their cash on the sidelines getting burned up by 6.5 inflation rate.
I agree.
Oh man, I'll tell you this. I get job offers still from like other industries that I worked in the past. Like I've had multiple people reach out to try to come back, and they're paying more. A lot more. Obviously, I'm not going back to work. That's something I'm not willing to do. But it's the people. There is the help wanted side, things like that. So when people are saying like everything's bad, I'm like, I don't know, man. Like people are making more money than they ever have. So the inflation thing is a question. Will that get curbed? And I think that's going to be really interesting to see what the Fed says for that reason, because as the markets are responding, like we've been talking about, the way they are, and money's going back into these risk on assets because they don't want to be in cash. It's their job to kind of push the market that way. And the question is, will they overcorrect? And one of the quotes from earlier when they were doing the meetings was, if we overcorrect, we have the tools to reverse it, is how he put it. I think, I don't remember the exact quote, something along those lines. And I'm wondering if he still shares that sentiment, like, has that changed? Or is that still something they're going to
Wouldn't
printing money?
Be printing money? Yeah,
let's be real. That's what it is.
Yeah.
we have the tools to reverse it. Okay.
No,
Yeah,
so
just going to print more money.
I want to pause because this has been phenomenal, and we're about to jump into more crypto, some altcoin stuff. But I want to let people know we're going to be running a little long today. Normally we end at 10, but this is such good information, and I want to hear more about other altcoins. So we're going to be running long, but make sure go ahead and smash that like button. We got well over 100 people, over 120 people watching, only 93 likes. If you guys are absolutely loving everything that Magic Internet Money is talking about, go ahead and smash that like button. If you're new here, subscribe to the channel, and we're going to go ahead and keep moving on. And we're going to run a little past 10. If any of you have to go, that's completely fine. You can come back and watch us. So let's go ahead and jump in, and with, we spend the next 10 minutes, 15 minutes. Yeah. I'm not really bothered by it. Let's jump into some altcoins. I know you specialize in Bitcoin. You have a trading group that you're the Bitcoin guy. You watch that chart a lot, but I've already mentioned XRP chart and some others. Let's look at some of the altcoins that you're excited about, that you're seeing some good trade setups happening there.
I've been trading XRP. So let's just talk about the elephant in the room that everybody wants to hear about, right? So XRP, the community should love me, but they kind of hate me because I'm a troll. But just know that if I put something online, it's never to be malicious. It's just, I just can't do the shameless shilling of projects and community, because I think that's how I wouldn't say you set the space back, but it really can lock someone into a maximalist mindset where then everything else sucks except for my project. And I don't think that's the case. I think we're way too early to be saying that.
That's a good point.
But this was a chart that I gave out, and it's on my Twitter. I've reposted it from 2021 in June. I was calling for $1.35 and then 29 cents. This box has not moved at all, not even like a tenth of a penny. This was my target for XRP. This is where I've been filling up and trading. Now, in terms of the quarter one low, and I'll make it larger so that people can see, because I don't know how well the dotted line comes across the screen, and we'll turn up the opaque. This is your quarter one low. So as I've been talking about, the quarter one low on a lot of assets is going to be the area you want to get back above. And that was our rejection point here. So trading this one back up like 50 cents was a really easy trade for me. Now you're back at support. This was a good buy again. So again, and I was on the record, if it comes back to this region, I'm going to buy it again, because support is support until it's not. It's such a macro area of support at 29 cents that, the risk is fine. It's a good play. You had a nice swing fail right here, this low, and these lows, and you left this one, which I don't normally like, but that's okay. But you did have a nice swing failure pattern. So even if you missed the move, you could have got in at like 33 cents. You've already come up and approached 40 cents, I believe. I mean, that's a great return. That's like 20%. No leverage needed. I don't advise leverage trading on altcoins. I don't think it's necessary at all. But if you start holding this box and accumulating here, especially getting back above 54.61 cents, I really think that the target on this can get pretty large. And the reason being is you put in a really big reversal pattern. So again, you guys know how I like harmonics. I don't know if I have it on this chart or not, but let's see. Yeah, that's it. So this was your bullish reversal pattern. And this is a really macro pattern. It's called a bat. Now, normally I don't like to see A and C so close to each other, where you've topped out, made your range, and then come back to the high, right? So that was very quick. However, what was really pleasing about this pattern and makes me think it's very valid is that when you consider the time that it took to make the first half of the pattern to here, you almost have an exact 1-to-1, meaning that it's a very symmetrical pattern. So the length between X to A and C to D are almost identical. And that's oftentimes when you stretch a rubber band, you can really only stretch a rubber band so far, right? You're not going to be able to stretch it too far before it breaks. So in the terms of like a 1-to-1, what you want to see is how long did it take investors to get so overexcited that the market finally reversed, right? People started taking profits. How long did it take the market to get so bearish that we finally reached a point where there was nobody left to sell, and we have people now buying this asset, right? Same amount of time. And oftentimes those line up. That's why you have Bitcoin cycles that line up, not just because of the halving and stuff, but there's a lot of, psychology that goes into that. And it came right into macro support. So for me, this is a really good setup. And if you were just to look at this objectively from just like we were looking at the DXY, the target on this is all the way up here, this box, big box. I don't necessarily like that, but it's very close to the overall macro TPO and volume point of control for me out through ATS. I don't have that chart up for this asset, but I remember it's $1.09. So I would be looking for that level. And that's a really big level or box here to flip, right? You start flipping this box, you're back up above, a dollar. I think that you could see some higher valuations on it. You could see $1.57, over time, of course. And then I know everyone's saying, what's your price target for all-time highs? I don't really get into too much of that. I just kind of get into, I'm looking to trade this and make money and then move on to the next opportunity. So I'm not partial to any coin. As long as it's a good setup, I'll take the trade. Unless it's just an absolute like low cap coin that, might have like 100K market cap or something, I'm not touching that one. But something like XRP, it's a big cap. It's been around for a long time. Do I know that they're going to win the case? No, I just know what the technical said. Technical said this was the zone to look at, and this is what you want to see. Now, on a high time frame, if you guys go to the weekly on this is like a little bit of free like education on XRP's charts. Very, very simple chart. I think we need to go to Bitstamp. We do need to go to Bitstamp.
Yeah, it's always fun finding the chart that gives you the data you need.
Yeah, there we go. So when we go to Bitstamp, guys, and you look at this chart, very similar to what Bitcoin looked like when it was at 20K to 3K. Really, really simple, actually. So we'll go to like the 3-month chart and we'll map that out real quick here. I can't do it on this one. I gotta go to the BLX. You always got to have all the charts, man. So again, we'll go to the weekly because it's just comparing apples to apples. You have your 20K high here, right? And then you have your 3K low. So if you're just to put like a range on this, and this isn't going to be exact because normally I would pull it with higher time frame, but this is okay. This will do. You have a range here, right? You've essentially let's bring this down to here because I believe this is that 12-month level. Sorry, the OCD won't let it slide.
You're good.
Yeah, there we go. That's what we want to see.
It's like watching an artist
right there.
Happy trees.
Yeah. So I used to in my old YouTube channel before it got banned, a little bit bigger than what I have now. I used to actually play the Bob Ross theme song at the beginning of every single video because people always told me, they were like, I love listening to your videos because it was all kind of like this. But so you have this range between 12-month levels, essentially. You can see you deviated it here, you came up, you back tested it, you got rejected. And then you came back and you back tested the range low, making a higher low or a partial decline before expansion. You come over to the XRP chart now. And what do you see? You've got your high, your 12-month level is right here. This was actually a huge take profit for me. You've come back to the lows of the range. You've tagged the 12-month level just like on Bitcoin's chart, and you come back and you're trying to put in that higher low. Now, can you come all the way down to these lows? You can, but we'll see what the market gives us. For right now, this was the best setup. And if this starts to reverse here, you do have the higher low in place. So then it does become a question of, can this start reclaiming levels that, for lack of a better term, actually matter? And if they can, I mean, you've got a pretty solid setup. And one thing I would do is I would just go to the quarter one low and I would just box off the EQ of this channel, like the 50% mark, and you just pull this over and you would just say, man, if we can get back above 54 to 62 cents, that little window, you can see what happens when you're above the box, right? You get above the box, where do you go? Top of the range. Support, pretty good bounce here. It was actually the 618. Descending triangle down below. This would look like a deviation, just like on the Bitcoin chart. Then we're looking at this from just a local standpoint of a trade. You just go, all right, from here to here, where's my range? Great. The yearly open is such a big level. Shocker. Get back above this level, though, and hold it as support. First target is 83 cents at a minimum, which from 54 cents, that's a huge gain. That's like 60%. It doesn't seem like much when you're looking at it, but it is. And then after that, you're looking to the range highs up around $1.35, which is his local highs. You have an NPOC at 157, if I recall, though. And that would be my main target. I think once you get up there, you're flirting with the idea of $2 again. So that's the really bullish case. Now the bearish case is you start breaking down from really 33.24 cents at this point. This is kind of your horizontal line on a quarterly chart right here where you're opening. So you can see this quarterly open that's being defended right now. If you were to lose that, I think that you probably are going to see 19 and 17 cents. I call it the range low. It's global support here. And again, I'm probably buying these levels, but that implies like a further washout in the whole market. So Bitcoin's going to be tanking, everything's going to be going down at that point. If this is, because this just moves, this does what Bitcoin does. So if we're expecting more upside from Bitcoin, I'm expecting this to try to double bottom out of this region off of that quarter one low at 54 cents. So XRP does have potential. So even though I sit there and I don't do the whole maximalist thing, and sometimes I ruffle some feathers, I buy the coin and sell the coin like any other. It's got opportunity for sure for the average trader and investor.
That was really good. What are some other coins that you're liking right now?
Yeah. So I'm in Q&T. That was a really easy trade as well as get a log for this one. So just looking at this one, quarter four regression, yet again, time-based regression. It's all we're looking at our prior year's range. And once you broke out of this resistance right here, essentially it's just like a triangle. All you've done is you've come back to the prior session, the last 6 months of 2022. This is the average of price, like to the penny. You tagged it. So you had a mean reversion play. Now you're consolidating and you're going up. For me, this was a really fun one because I got to call the top and the exact bottom. So wow. I've still got that on my Twitter. I called this one. I was off by a few days. I've left it there because it's so close. Just to remind myself, there is no such thing as perfection in this market. Yeah. But this was the pattern I was looking for, and I got it. And this was, again, these are just high time frame averages of price, 6 months, the quarter one, the yearly for 2022. They all line up in the same region. And it was the completion of a deep crab, which is a very, big reversal pattern, which you had here as well. So you had two of them back to back. And so I was looking for rejection here. This is a big take profit. And now I'm looking to get long in this asset again. And the idea behind this for me was really, really speculative because before I got banned, one of my most hated videos on YouTube was actually, I was calling for sub like 175 when we were trading up at $400. I started calling for, really low valuations, and they went lower than I initially expected. But I think it was April, I started looking for about $40.40. So what you'd be looking at is something like this. This was my long idea, was essentially looking to the gold pocket down to the low, and I was looking to long this up potentially to this weekly NPOC at 361. That's a really, really speculative idea. And essentially what it would look like is I literally have idea only right here, as that's what it's labeled. You'd be looking for a bat. And so this implies a larger range, but it may break out from there. So it would be really impulsive, and I'm not expecting it. It's a little bit ahead of schedule. You can see that the low was made here. So it would be a really quick move. So I'm going to be locking in some profits up here at the gold pocket and the value area high from 2022. And I'll probably lock more profits in up here because this is already kind of our verified range high, right? So if you start cracking, $200, let's just use that as a round number. You could see 272, 361, like fairly quickly, because there's not much price action here. You got to think what goes down fast will go back up fast, right? Mm-hmm. But I think that it would be healthier if it didn't make that move. I think if you made that really quick move, I would take profits. Generally, those aren't rewarded with long-term continuation, but I've been wrong before. So on this one, I'm just trading it. Take profit is up here. You're at a little bit of a speed bump at 145. I think that was the level I gave on Twitter. There's a speed bump there, but once you're through it, I think that you will see 166 and then maybe even as high as $200, which is technically your range highs from a structural standpoint. And then we get to play the game. Does it continue, or do we roll back over and get to do this all over again and keep ranging, and that's going to be dependent on what Bitcoin and stuff do.
Good. This is such good stuff. And I know, we have a couple minutes left here, and we'll go ahead and wrap it up here. I know there's one more coin that you're looking at, and we'll do that, and then we'll close out the stream here in just a couple minutes.
Big one for me was Polkadot. So this is one of my largest pickups. So I was looking for 419 on Polkadot. There was a what was it, quarter four 2020 NPOC right here at the top of this box. I usually line the boxes up exactly. It was at 438. So I was averaging in between 438 and 419, and the low here is 423. So it was a really great play for me. And it's since ripped up to the 2021 low, which is what we were looking at on Bitcoin at potential if it continues higher. So it's also going to be your overall point of control from 2022. So recovering this like $6 to like $6.78 mark, I guess, or 638 to 678, this little window here, or even just this box would be pretty big. You could start targeting these local highs. But this one just, you got to think it was at $50 and it's all the way down to $4. So this was just such a nice area to find. And if you went to the weekly time frame, you can see I've got some support beneath me. And so that's why I was kind of confident in this one. So everyone would always say, how do I know where the demand is in this zone? You can use volume profile, whatever suits your fancy. But you had a really nice swing failure right here. So you can just see that you've taken this level once, back test, back test, back test, back test, back test before launch. So you had to know that you were going to be getting demand in this region. And then as always, we default to the high time frames. You start going out to the monthly chart. You can see you've got a monthly open here that was never backfilled, unlike a lot of them. So, and it makes sense to start boxing it off here. You had a quarter four 2020 NPOC. There was just a lot here to say, okay, this is more than likely the support. But if we start closing, weeklies or monthlies below 376, I might reconsider my position. However, You got a really great reaction off of it. It's been over 50% since. Obviously, this was take profit one for me. This was the prior session in POC from quarter 4 last year. And then the quarter 1 pivot was right here as well. So this was your initial mean reversion play. Now this is your yearly point of control play and your local gold pocket. You've gotten the pullback off of it. You're now pressing into resistance again. So really want to see us getting back above and holding this box of support. And if so, I think it's got quite a bit of room to rip.
Yeah.
And I would be trading that one accordingly. So that's how I trade alts. I just try to buy them when it makes sense. I generally do take profits. I spin it back into other things like Bitcoin, or I take it and go to, whatever asset might be suiting me best. Sometimes it's I don't do anything with it, because there's not always a trade out there. But yeah, those are some of them. I will say this: I missed out on a couple. The ones I missed out on was ADA. I was telling you that in DMs.
Yeah.
I was like, you guys are gonna kill me, but I missed ADA. I missed ADA by a couple cents, and that's okay. Like, I'm not gonna get every single setup I want, but one thing I want to drive home when I say that is, if it doesn't meet the criteria for me to take the trade, I just don't take it. I never FOMO. Like, if it doesn't hit my level, everyone goes, what happens if it doesn't get there? I don't care.
Yeah.
I just trade whatever it does. So out of like all the altcoins I was looking for, there were 2 or 3 that I didn't get to pick up, but I'm okay with that. And the ones that I did pick up are paying me really, really well. And I'll rotate back to those charts over time. And when the next opportunity comes, I'll take advantage again, so
out of curiosity,
that's all it is.
What was your target for ADA that you missed?
Let me pull up that chart. I've got it.
Was it 22 cents?
I believe I think it was like 18, to be honest with you.
Yeah, well, we were talking about, and I tell everyone here on this channel, ADA's fickle. It takes off when no one thinks it's going to take off. It dips when it's supposed to be rallying. I had my eyes, I purchased some more around 24, 25 cents, but I had my eyes at 22. 22 was where I was really excited about the price getting to, and it didn't get down that low.
This is where I had it. Actually, it was even lower than I gave you. I had 15.7 to 8 cents. And this is a target that I gave back in 2021.
Wow.
I've been waiting this whole time. I did trade this one here, though. I traded it here. This was a really nice trade for me.
Yeah.
This was a big level of support. And so I did trade this. So I haven't missed out on all the big moves, but I don't trade alts I'm not in alts as much as I am Bitcoin, because it's been a bear market for one. And I've largely just been sitting on a really big short for most of the year. So I'm excited to get some opportunities. So I would love it if ADA came down to this box every time. Now, my alerts are set there. It's where my bids are. Yeah. We'll see. I may never get that, but that's okay. If not, I'll find a spot to get in. I'll find a setup.
Yeah. Someone asked me the other day, they're like, Tim, what would you want to see happen on the charts? I said, I would love to see everything drop to 1 cent, and then I get to buy a lot of it. It skyrockets, and that would be a dream come true. But
I laughed pretty hard at that. I saw that comment.
We're going to go ahead and wrap up today. This has been a phenomenal episode. Again, this was our second guest. We had a phenomenal episode last week with Caleb Franzen. Today, Magic Internet Money just hitting it out of the park. We're going to get him on very soon. I'm excited about next week. I don't know if he's still in chat. I think he had to leave because he's preparing for his own show. But Kelly Kellum will be here. And I think we're going to start turning it. Wednesdays will be our guest show. So prepare every single Wednesday to come in and hear from phenomenal people just like Magic Internet Money. We're going to get him on again really soon, because that was some great stuff. Maybe even we'll have to shoot some other content with him for like weekend stuff.
And his Twitter handles are just down in the description. All you've got to do is scroll down and click on those links, and you can have access to Magic Internet Money's Twitter.
Yes.
What's better than that?
There you go.
Absolutely. Well, guys,
be careful. I post memes, so be careful.
And if you guys are in the XRP community, also be careful. From his Twitter channel, supposedly. Guys, that's all we have for you in this episode. We'll have more information tomorrow. A lot of people I saw in chat asking more information about what's happening with Patreon and Discord. We'll be giving an update on that tomorrow. But go ahead, if you have not already, smash that like on the way out. If this was your first time here, thank you for joining us today. Go ahead and subscribe to the channel for more amazing crypto and stock market information just like this. That is all we have for you guys today, but we will see you tomorrow. Have a great day.